Hi everyone. In last video we talked about how to set up the Ninja Trader, and this time let's go through a simple back test. To do a back test, first of all we need to search for trading strategy, and then let's go with the RSI related strategy first. RSI meaning relative strength index. We choose that because it is usually simpler than the other index. And then there's tons of this strategy coming up. Then let's just choose the first one, the swing 5, so-called. And then from the trade station, then there's a lot of description. Let's just skip it at this point, and then go directly to the strategy rule. And then the long entry meaning in what kind of conditions we should buy in the stock. Then the condition 1 saying if the closing price of the stock is greater than its 200-day exponential moving average and the RSI less than 30, then we should buy in the stock. And then the condition 2 saying the closing price is less than its 200 days EMA, and also the RSI less than 25, and there's something related to the open close price, something like that. Then yeah. The other thing is the long exit. That means in what condition we should sold out the stock. Then just simply when the RSI calls about 40, we can exit the long position. Okay. For simplicity's sake, I will only do the condition 1. Let me just click on the Ninja Trader 8 icon and then to bring up the Ninja Trader 8. Okay, that's the panel, and then we click the new, and then choose the strategy builder. Yeah, here is the panel of the strategy builder, and it is pretty simple for a case. Then for the general tab, we just enter the name, whatever name. I key in the string 5, and then the default property, we just choose the on barcodes. And then if you are going to do something like on real-time trade on stock future, index future, all those things, you may need to use the on each tick and on price change things. But now we can only use the on bar codes. That's enough for us. And then click next. This additional data we can skip. And then next, and then the input and variables. And then for here, we can set up some variable. We do that because we can change it easily. We don't need to set up the rule if we want to change the parameter. Like EMA 200, we can treat it as a input parameter. Then if we want to change it from 200 to 100, then we don't really need to do it all over again. Then we just need to change the parameter. And then the second parameter is the RSI period. It is 5. It is string 5, so obviously we put in the 5 as default. And then the third parameter is the long entry when the RSI need to be smaller than 30. So I create another one, RSI value, enter. So keep it 30. The last parameter we need is the RSI value for exit. It say it should be about 40. So let's just put in 40. So that's it for the parameter and variable. and we click next. And then we need to key in the rule. There's drop down if any is all, if any, if all, it is basically or and condition. We choose if all and type in the first condition, which is the closing price should be greater than the exponential moving average EMA. We click it, then check the plot on chart as well for visual. And then in the parameter, the period parameter, let's click the set and then choose the EMA period variable we defined before. So click OK. This is the condition 1, the first rule. And then the second rule is the RSI should be less than 30. So on the left hand side we choose RSI. Same, click on the plot on chart for visual, and then the period we choose the RSI period we defined before, and smooth just put in 1. And then choose the user input, because we need the RSI to be less than the RSI value enter. Less than, and then click OK. So it is the long enter condition. Then let's choose what we need to do if the enter condition is satisfied. We choose enter long position, and then the quantity just put in whatever 100, and then signal name I put in long, and then you just need to remember it, because we need to match it when we define the exceed conditions, but it can be anything. So it is the set 1. We have condition and do the following, and then let's set up a set 2 for the exceed condition. It is relatively simple, which is the RSI cost above 40, and then we add the condition, find the RSI, and then check the checkbox. Also set the period as the RSI period, and then the smooth just put in 1. And then the left hand side we choose user input, and then greater than the RSI value exceed, then click the enter, and then do the following. We click the add order management. When the condition is satisfied, then what we need to do is to exceed the long position. Just click the exceed long position, and then put in the signal name we have entered before, and then also quantity put in 100. Then click next. We more or less complete. Click next, and then let's go back and check it again. Then it's okay. Then click next, and then the other tab stops and targets. Let's skip it at this point, and then click the next. In the finish tab, we click the compile. Okay, strategy generated successfully. Then it is more or less completed. We can click the unlock code also, then in case we need to fine-tune the strategy, full coding. And then let's go back to the panel and then click the new again, and then click the strategy analyzer. In the left hand side, you can under the strategy, you should be able to see the new swing 5 strategy we just created, and then all these input parameter you can change it later on. And then the instrument, I use Apple as the example. just AAPL, right? Just, and then the type we choose date. Oh, remember to connect to the data market data provider, Yahoo, which is now. And then in the time start days, let's set it to 2011 to today, because usually we need at least 5 to 10 years for the backtesting. And then the maximum bar, let's set it infinite, and then click the 1. Okay, the result just come up right away. Then it is the result of the backtesting. There's quite a lot of figure you can see. The total net profit, which is important, at least it is a positive number. Then the next thing we can see is the gross, the gross profit and gross loss. The gross profit, it is much larger than the gross loss, which is good. And then there's also a profit factor, which is just divide the gross loss by the profit. Then usually if the strategy with larger profit factor, we treat as a good strategy. And then 6.22 is a very good strategy. So even if a strategy with the profit factor larger than 2, we treat it as pretty good. The other thing we can look into is the total number of trades. The 40 meaning within that 5-year time, we have 40 chance to buy and sell this stock, which is okay, pretty good. The other thing is the average time in market. So it is around 5-6 days, and then it means in average how many times we need to hold the stock when we buy it in. So 6 days, it is meaning if 6 days, which is okay, I think, low risk, we treat as. So there's another things we can see. Also, we can see the chart. Within this screen, we can see those time frame we buy in and so our stock. You can see the exact time we do the trade. Okay, let's do one more thing, and then let's change the start date to the beginning of this year, the 2016, and then click the 1. See, and then if we do it from this year, from the beginning of this year, then the strategy just make us losing money. So it is the tricky part of this kind of analysis, technical analysis. It is you can see it one good for 5 years, but say for example, if you run it for 5 years, then you find it is good, then you just try it from the beginning of the 2016. Then throughout the 6 months, you only find one trade, and then also you lost money. Then will you still keep on to use this strategy? So it is probably the question and then the tricky part of all this kind of technical analysis. Okay, that's it for today. Thank you.